Commodity TV, ladies and gentlemen. Second day here at PDAC in Toronto. And I have the pleasure and honor to be joined with Ryan Key, EVP Capital Markets of Equinox Gold. Ryan, thanks for your time.
Hey, Mark. Thanks for coming in and checking up on us. It's been a little while, but good to be here.
100%. So last year, today is the 1st March 2026, exactly 1 year ago, you did this big announcement, the merger with Calibre Mining. So what have you achieved the last couple of months? What's going on in the company? Give us a bit of an overview, please.
Sure. Well, before I do, let's just remind the audience that at this time last year, gold was about $2,800 an ounce. So it's amazing what can happen in the period of 12 months. Today we're at $5,300 an ounce. And what does that future look like? I think it's pretty stable in this price environment, given what we're seeing in the world with the macroeconomic landscape. But now let's take it to the business level, Equinox Gold. We closed the deal with Calibre Mining in June. And we went through a period of resetting expectations, what the assets can deliver into. And it was exciting to see the evolution of the assets, and particularly Greenstone, which is in Northern Ontario. We reset expectations there. We set expectations for the rest of the year, and we delivered into those expectations.
Exactly.
Darren Hall, who was the CEO of Calibre, he became the new CEO of the new Equinox Gold. And so there's been a modicum of change over the last 6 months.
100%. It was not just a merger of really great quality, high assets. It's also the merger of a great management team from both sides.
Indeed, it's a strengthening of assets, it's a strengthening of portfolio, and it's a strengthening of the team. And so as a result of that, we were able to deliver into the expectations we set for the market. And last year was a record. It was 920,000 ounces of gold. So it's been a lot of change, though. At the same time, we've divested of some smaller assets, our Nevada assets in Pan and Gold Rock, for about $150 million in total. We also divested recently of our Brazil region.
Exactly.
So that was about 250,000 plus ounces a year that we divested of. And with that, we were able to de-lever significantly our balance sheet. You know, and before you go, when we closed the deal between the two companies, we had about $1.5 to $1.6 billion of net debt.
Yeah, I know.
Right? At the end. Today, we're probably about net cash neutral.
Okay.
Right? We're about at the end of January, we were about net debt $100 million.
Wow. Is there an idea to get rid of every debt in the future?
Great question. So today we've got a revolving credit facility that we've drawn about $500 million. The way things are trending with regards to our production, with regards to the gold price and our spend and our cost profile, we would expect to be debt free by probably the second half of this year.
Wow.
Right? Now let's see how it goes. But it is a priority for us because we want to make sure that we're setting up the balance sheet for our ability to fund the organic growth in front of us, which is pretty exciting. We've got our Valentine Phase 2, which is still in ramp up on the Phase 1, but we've got Valentine Phase 3, which we're working through. Then we've also got a very exciting opportunity in California. So we're currently operating in California, and this year we've guided 70 to 80,000 ounces of production from our Mesquite mine. But we've got this opportunity called Castle Mountain. And Castle Mountain is going through the FAST-41 Critical Minerals Infrastructure permitting process. And we've been told that we will get a record of decision by December of this year.
Okay, just in case of permitting, or also any other goodies, I would say, from the government?
No, this is just a set timeline. It doesn't expedite the timeline. It's just a set delivery of timeline. So that's why we're pretty confident on that December record of decision. It doesn't guarantee a positive record of decision, but given that we've been put in the FAST-41 process, we'll see how it goes. Let's play that out, though, and say, okay, a positive record of decision potentially in December. Castle Mountain is a 200,000 ounce a year production profile based on the last technical report. And we're working through an updated technical report there as well. So the next step after the assumed positive record of decision, can't guarantee it, would be the state and county approvals. And again, we've been operating in California for many, many years, and we've got a good relationship base within the regulators there. So again, that could be another growth opportunity for the business. Valentine phase 2. And then the third potentially is Los Filos, which is in the portfolio, which is currently on suspended operation. But we are progressing and working through land access agreements with the 3 communities there, and we'll see how that goes.
Okay. And coming back again to the management, so especially Darren Hall has such a big experience in order to manage, in order to get along with all the communities, with all the people. So how would you say is it going though in that way?
So in particular, a specific region or across the business?
Especially Los Filos I'm interested in, because lots of questions we are getting from our side.
Yeah. So now Los Filos, it's been in operation for many years. We put it on indefinite suspended operation around this time last year. It's a heap leach operation today. The heap leach operation would likely be suboptimal. Now, we've gone through and we've done an updated technical report that's a few years old now that would envision putting a plant in place that would help get better recoveries and better gold production. And I think the average was around 280,000 ounces a year for almost 15 years. Yet at the same time, that was designed at $1,300 per ounce gold. So when we look at a scenario where we look at a $1,700 or maybe even a $2,000 from a design perspective, there could be an opportunity to expand that and make it larger. So we're going through the scope and scale to understand what that looks like. And to your point, at the same time, we're continuing our efforts in negotiation with the 3 local communities to get long-term land access agreements so that we can set the asset up for, again, for the future, for long-term, multi-decade production profile. And so we're working through that now. I think we're making progress, but it takes time and we're not there yet.
And you have so much other projects with your homework. So coming back to the numbers, 2025, you said almost 1 million ounces produced in gold. So at these high gold prices, you get rid of your debt. Also, you are starting to paying dividends now.
Sure.
And the recent news was the share buyback program. So tell us a bit about that.
Sure. Yeah, no, as a result of that transformation of the balance sheet, and as a result of current gold prices, we can fund our 2026 and organic growth pipeline, our growth capital, our operations, our exploration. And one of the things that we thought was a good use of capital because of the amount of capital and cash flow that we're generating is return capital to shareholders. So we're fortunate that we were able to do that in the form of a dividend, albeit this is a small dividend to start. And we'll see how it goes going forward. But it's a token of a demonstration of our balance sheet now and the strength of the cash flow generation going forward. A share buyback, we said that we could buy up to 5% of our issued and outstanding shares. We'll see how this goes. I know we're committed to some capital there, and we'll see how the year plays out from a production cost and cash flow generation perspective. But yeah, that's another opportunity to help return capital to shareholders. But what's really important in this is the fact that we've now set up the balance sheet such that we can, at these metal prices, self-fund our organic growth.
That's very important.
Which could be, upwards of 400 to 500,000 ounces between Castle Mountain, Valentine phase 2, and the potential outcome and optionality with Los Filos.
Okay, so your forecast for 2026, how many ounces do you want to produce?
Yeah, our guidance for this year is 700,000 to 800,000 ounces. So we take the midpoint of that, say about 750,000 ounces between the drivers are Greenstone in Northern Ontario, 250 to 300,000 ounces. Valentine in Canada, 150 to 200,000 ounces. And both of these are likely to be H2 weighted because, again, we're ramping these assets up. Then we have Mesquite and Nicaragua, which is about 200 to 250,000 ounces a year. So in a very exciting time to be ramping up tier one assets in tier one jurisdictions in Canada, Valentine and Greenstone. But it's an exciting time as well for investors because of the price of gold and looking at all the products out there to get exposure to gold. And, we're working towards becoming a top quartile value gold producer. And we've got the ingredients to get there. And we've started to do a buyback, and we've started to demonstrate our operational track record now. So I'm excited about the future. I think there's great opportunity in front of us. But what I'm also excited about is we're allocating $70 to $80 million this year to exploration. And truly at the heart of Equinox Gold, we're explorationists, backed by billions of dollars of revenue. So it's always about finding new resources, discovering new zones, and of course, replacing our reserves. But it's an exciting time to be in the space.
Yeah. And as you said, it's self-funded. So
yeah,
it's amazing. In that case, what do you see? Where do you see the next catalyst? Of course, also some exploration results are still missing, or where are all these programs running now?
Sure. Predominantly, the exploration programs are running in Newfoundland at Valentine. We've just actually recently announced some great results from a new zone called Frank, which is along the trend. We'll call it like the string of pearls, if you can visualize something. The pearls being the open pits, and we've got 3 defined now. And we're working on potentially the 4th, which is this Frank zone, which is right nearby our current operations. We've also discovered a new zone about 8 kilometers from the mill. Early days, but a new discovery of gold on that property. So a very active year there at Newfoundland. Nicaragua's always been an active region for us from an exploration perspective. If we think back to 2019, Calibre Mining, we started there and we had 2 mills separated by about 200 kilometers of paved Pan-American highway. And we were likely going to shut down one of the mills because it did not have mill feed. But because of the small amount of cash flow we were generating, we put that back into the operations and we put it back into the ground. That's evolved to having almost 1 million ounces. I think we had a little over 1 million ounces of reserves at the end of 2024. Based on the exploration programs last year, I think, again, forward-looking statements, so we got to be careful with this.
Of course.
But I think we're probably close to somewhere between 900 and 1 million ounces of reserves at the end of 2025. Plus, we've produced now 1.3 million ounces of gold out of Nicaragua. So it's we're allocating capital there because we see good upside and good opportunities. But there's still plenty of very good exploration potential at Greenstone. So some catalysts coming up would be that exploration. But importantly, a really interesting but critical catalyst coming up for our business will be boring. Boring. Quarter over quarter, delivering into expectations, not seeing huge spikes or challenges. But if we can be boring and get the investor comfortable and confident with our ability to deliver into expectations, I think that's going to be really critical. And that'll be a catalyst.
For me as an investor, it's going to be nice to be bored of Equinox Gold and the gold price. Your stock price is going up all the time. So
well, the thing is that we're building that operational track record. And if we look at some companies that are top quartile valued, an Agnico Eagle or an Alamos Gold, they have a long track record of delivering into expectations, and we're building that now with these new Canadian assets.
Exactly. And last question in that case. What do you think about your valuation compared to your peers?
Yeah, I mean, that's everyone's always looking at that landscape. And of course, investors are looking at, your price to cash flow or your price to NAV and a lot of different metrics. EV to ounce of production is another metric that investors look at. If we looked at our portfolio today, and we must keep in mind that we're still ramping up. So that means there could be hurdles and challenges that we have to overcome as we go forward. But, for example, I think we're trading around 16,000 EV to ounce of production versus the peer group. And I know that the top quartile guys are trading in that 25 to 30,000 EV per ounce of production.
That's half.
So there is opportunity, but it's really on our shoulders now to deliver into those expectations, continue to generate value for our shareholders. And we've, hopefully we've done that by a small dividend and a share buyback. But the key now is just continue to deliver into quarter by quarter and then allocate capital appropriately from an exploration perspective. And I think, pending the gold price, I think we'll start to see that in our valuation.
Perfect. Thank you very much, Ryan. Thanks for these insights, and always good to be here. Always good to have a chat with you.
Now, Mark, it's always great to have a chat, but I will mention that, a lot of what we've talked about here, it is a forward-looking statement. Of course. So there's never any guarantee, but the team is working really hard, and I think we've got the people, the assets, and the structure to have a great, successful company, and we're on a great path.
100%. Thank you very much.
Thanks, Mark.
Yeah, ladies and gentlemen, that was Ryan King, the EVP Capital Markets from Equinox Gold, and you heard it. They delivered last year so many milestones, and 2026 will be excitement as well. So check out the company, and bye-bye here from Toronto.